The earnings season, as you know, kicking off this week, and we got the bank names. And banks traditionally, you can't have a real rally unless you've got the banks coming along with you. And that maybe is the reason that we are not seeing a huge muscle-bound rally at the moment. But election seems to have been a very big grand slam for the banks overall. Look at these numbers, and you can see anywhere from 20 to 36% gains for the names that reported today. We're talking J.P. Morgan, Bank of America, Wells Fargo even, which has been struggling with just a horrific scandal, as we should say. Let me bring in Paul Miller. He's FBR Managing Director and, of course, the top banking analyst. Paul, talk to me, Goose. If banks can't soar on this kind of news, and on top of it, we haven't seen any indications of an actual procedural move to get rid of something like Dodd-Frank, these so-called onerous regulations that have been holding back banks, why should any of our viewers be buying banks right now?
Well, I mean, they're not going to repel Dodd-Frank. Dodd-Frank is really handcuffed these banks. But what you've done with the new administration, a more pro-friendly business and banking administration, is you're going to stop all this new regulation coming about. The problem with the banks is they really didn't know what the atmosphere or what the framework's going to be to operate in, because almost every regulatory body in Washington, D.C. was coming up with more and more regulation. You can see the new guys coming in on the Trump administration right now, and these guys are going to be deregulation or less regulation. I don't think you're going to get rid of the stress test. I don't think you're going to get rid of a lot of this stuff inside Dodd-Frank, but how it's administered, how it's applied to the banks is going to be a lot friendlier going forward, and that's going to help the banks a lot. Now, these banks have had big moves since the Trump administration, but go ahead.
Okay, so give me, you know, you're the kind of guy who looks and sifts and says, I only like certain names. Please share that news with our viewers, because if some of them do want those financials in their portfolios, they're saying, I don't want to dip into dangerous territory. Wells Fargo may look decent now, but this is its first report since that horrible bogus account scandal, and I'm just not sure that's entirely in the rearview mirror.
I don't think it's in a rearview mirror either, and that's why we're at market performing that. But there's a lot of people that really like Wells Fargo, and you've seen it probably outperforming the group, at least it was earlier today, as some of that scandal is really not falling to the bottom line, and they'll continue to see some decent account growth there. We like Bank of America. We think the bar is low there. Their ROEs are around 9–10%. If you can get a lot of these Trump policies through, their ROEs could jump to 13–14%, and they're at 1.3 a book, the cheapest of any of these guys on J.P. Morgan and Wells Fargo. So we think the big winner through this whole process over the next year or two is going to be Bank of America. The stocks had a big move since Trump was elected, but we think there's more behind that.
Okay, 14 banks are reporting next week. And let me just say that it's financials, all kinds. Charles Schwab's thrown in there. Not necessarily a bank. American Express, but you also have Goldman Sachs, Morgan Stanley, U.S. Bancorp. But what do you think really happens here? Is this a sector that continues the incredible run it's had since Donald Trump was elected?
I think yes, I do, but I don't know if the earnings are going to show it. The earnings right now is rear view mirror. This is all fourth quarter earnings. The new policies haven't taken effect yet. We don't know what type of tax cut. We don't know what type of stimulus package we're getting. So everything right now is going by what is the body language of the management teams. Right now, you saw Jamie Dimon for J.P. Morgan talk very positively, not just by the U.S. economy, but the global economy. That's what people will be looking for, not necessarily what they earned in the fourth quarter.
Hey, listen, it's great to have you. Thank you so much, Paul. Really appreciate your perspective.